This is not financial advice, not legal advice, for entertainment and educational purposes only, and anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, all that YouTube algorithm stuff so you get the videos I put them out. See what I'm thinking, see I'm analyzing that data. But like I tell every day, the day they release us is false. Many gives a false narrative of the market so we can make bad trading decisions. Listen, I put out a video a few days ago about turning $1,000 into $1 million in under 36 months. And people wanted more details on it. And once again, this is just what I'm doing. I'm not telling you to do it. This is just what I'm doing. I'm telling you guys how I came up with it, how I'm moving forward, and how I'm going to do it. It's a little private bet between me and a buddy of mine. And a lot of people were interested in it. So here's a breakdown. And it's very, very simple. It's not complicated at all. It uses the fact that QQQ trades 5 times a day. It's hard for these criminals to manipulate it too much. Not saying it's impossible, but a lot more difficult than manipulating a OTC, over the counter stock, or not Apple, but like AMC, GME, smaller type stocks they can easily manipulate. But with QQQ, it's a lot more difficult. So in my opinion, your investment is a little bit safer from the criminals, the bad actors, the naked shorters. And like I tell every day, every company is at risk of being naked shorted. Every company has been naked shorted, like I tell you before, except I think maybe Berkshire Hathaway. That's the only one that I think has never been naked shorted because of the price of the stock. But anyway, the first thing I did, and you don't need to have any paid, no paid charting service to do this. You can do it from Yahoo Finance. So I went to Yahoo Finance, and then you put in you put in the charts, and then you put in indicators. And on the indicators, you want to put the Bollinger Bands, you want to put the EMA, you want to put the RSI, and you want to put the MACD. And you're going to use the default settings that Yahoo Finance puts. And now you got the chart that you're going to use to determine if QQQ is going to go up or QQQ is going to go down. Okay? Now, once you got the chart, it's really, really simple. You're going to look at the Bollinger Bands. You're going to look at the RSI and the MACD too. But to me, in my opinion, based on what I've been doing, the Bollinger Bands, when it comes to this, is very, very important. When a stock is at the top of the Bollinger Band, more than likely, it's going to go back down. It usually, not saying it's impossible, but the likelihood of it's going too far out the Bollinger Band much more is usually not going to happen. It might go a little bit out, but then it's going to come back down. Because it's going to come back down. And the same thing when it's at the bottom of the Bollinger Band. If it's at the bottom of the Bollinger Band, it might go down a little bit more, but it's more likely to start going back up. I mean, that's just how the Bollinger Bands work. I don't have the technical analysis of how it works. It just works that way, okay? And if you guys want to research it and do your DD and find out why the Bollinger Bands work that way, you can. But I did not need to know all that, okay? I just look at what it does, and then I utilize it to make my QQQ decisions. Now, why QQQ? QQQ is an ETF like SPY that has expiration dates every single day. So you have the opportunity 5 times a week to make money off of QQQ options. So when QQQ is at the top of the Bollinger Bands, I do call credit spreads. And all a call credit spread is you buy a call option, you sell a call option, and you make the difference between the strike prices, okay? Between the premiums, whatever the premium is. You make the difference between the premiums, and that is your profit. And you can do that 5 times a week. with QQQ. When I go to the charts and QQQ is at the bottom of the Bollinger Bands, then I buy put credit spreads. I buy put credit spreads. And a put credit spread is just the opposite of a call credit spread. You're going to buy a put, you're going to sell a put, and you're going to make the difference between the price between the buy and the sell. I mean, it's very, very simple. It don't take rocket science. You don't have to be a stable genius. You don't have to be a quantum scientist. I mean, it's very, very simple. Now, what I do is, whether I'm buying the call credit spreads or the put credit spreads, I go out to about 11, 12 delta, more or less. But the delta is not even relevant. What you want to go out to is where you make between $11 and $8 off each contract. That's all you have to do. And the thing is, you're buying so far out that QQQ would have to reverse and go in the opposite direction so much in one day for you to lose on the play. And not saying it can't happen, because of course anything can happen in the stock market. I mean, wars could break out. I mean, anything can happen. Anything can happen. But you have 5 times during the week to do this play. And you only need to win once and you're done for the week. Okay? Because the way I did the numbers, if you make 5% every single week and you increase that, making 5% on 5% on 5%, and you started off with $1,000, in under 36 months, you would have over $1 million in your portfolio because of compound interest. And a lot of people might think that it is too simple, but no, it is really that simple. And on the days that you lose, if you're down more than 15%, get out the play. If for some reason it goes totally against you, get out the play. And another thing, if you watch my other videos, if you know the Fed's gonna make announcements, you know there's earnings reports coming out, then you sit back and relax and you don't do any plays. But then again, do your own DD, come to your own conclusion. And another thing that I do to decide the direction that I'm gonna bet on with QQQ is I look at Meta, I look at Apple, I look at Amazon, I look at Google, I look at Microsoft. Okay? Because these are the stocks that's in QQQ ETF. If these stocks are on a downward trend, more than likely, not guaranteed, but more than likely, QQQ is going to be on a downward trend also. So you have the Bollinger Bands, you have the MACD, the RSI, and then if you're still not sure about which direction QQQ is going to go, then you look at what Microsoft, Amazon, and look at what they're doing. And that'll give you a better indication on where QQQ is going to go. And when I look at the charts, I only do the 1-day and 5-day charts because I'm not holding these positions for more than 2 days. I do Monday for Wednesday, Tuesday for Thursday, Wednesday for Friday, Thursday for Monday, Friday for Tuesday. I give the option 2 days to play out, but a majority of times I'm closing them out the next day because it moved in the direction that I thought it would move in. But if it didn't, then I might hold it for the second day. But I'm only holding them. I'm doing 2-day expirations. I'm doing 2-day expirations. But if I'm up the following day, I get out of the position. And this is doing it 5 times a day. You don't have, 5 times a week. You don't have to do it 5 times a week. You can just do it one day a week, make your 5%, and then sit back until next week. And if you do that over the course of 52 weeks, over 36 months, you're going to end up with $1 million in your portfolio just based on compound interest. Anyway, please leave some comments. Tell me what you think. Do you think that this is a good low-risk plan to turn $1,000 into $1 million over 36 months? Anyway, have a great day. God bless, and I appreciate y'all on the journey with me.